Welcome in, welcome in. Hello, hello.
Okay, if there's one AI site builder you need to meet, this is Dope Tech
Hello.
from Wix.
Hello, hello. All right, so while we wait, I think we'll get started at 7 o'clock. It's 6:46. So while we wait, I'm just going to do my top-down analysis on GJ. All right. And so remember, we are doing structure. So this is GJ's structure point. If I get the right tool out. Can I teach you for free? Yep, that's what we're doing here. All right, so these are GJ structure points. As you can see on the monthly, we're making a W. Price is heading up. And price is currently stalled in this fair value gap here. Alrighty, and I see a trend line. I have a rejection point here and a rejection point here. All right, so as you can see, this is where current price is. Price has been in this area for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, going on 12 months, past a year. Price has been in this area. All right, so now I'm gonna come down to my weekly, and let's see what's going on in my weekly. Okay, so it looks like price is heading back down. We've hit this zone once, twice. We haven't quite hit it again yet. So I want to see what price is reacting to here. So now I'm going to come down to the daily. And I see a fair value gap here. Right here. Which is where price currently is. And then of course I see some resistance here, but I want to see about this price balance range here. Okay, let me delete that gap. All right, so I see a price balance range here. A price balance range is when you have a inversion fair value gap and a fair value gap, and price hasn't filled the area yet. And I just came over on this purple line that's 50% of the zone, and price rejected it a couple of times. Right, we got rejection, we got rejection, we got rejection, and then we have a break, and this is looking like a retest. But if we look at Yesterday's candle price closed underneath the zone, and today's candle looks like it's rejecting. I may close my buys because I did get in buys, which is why I'm marking this up again to make sure I'm seeing it right. And then we also have this current fair value gap here that price rejected from. So we have this gap right here, this area right here. It's 70 something pips, so I don't think I want to be in 70 pips in a drawdown. I also can do a trend line here since we got all this rejection here. Alright, now I'm going to come down to the 4 hour. And maybe you guys can see the zone a little clearer. You see right here on this purple line, we rejected, 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 rejected. Price tried to break through, but it still closed underneath. And we finally got our breakthrough. All right, I have liquidity up here somewhere also. Okay, right here. So if you see these two candlesticks right here, they are equal. And this fair value gap here will be good for TP. It's just when is price going to buy? I see another gap down here, which price can come down and touch and then bounce off of the trend line again. Gonna come down to the hour. And see, we got nice rejection from here, plus an evening star. The news today, wait till after news. I'm good. Plus an evening star. So we'll see. If my stop loss get hit, it just get hit and then we'll re-enter. But for sure looking for price to come back up here to this monthly fair value gap. This area right here. All right, it's 6:52, and I think we're gonna go ahead and get started. So if you're new here, we were going over the Candlestick Bible. Those videos are on my YouTube. The link to my YouTube is in sorry about that. The link to my YouTube is in my bio. And someone said go pay. Nothing comes from free, especially not Forex. I mean, it just depends on what the person is giving out, right? There's a lot of free information on YouTube, and a lot of people take it and they're profitable from it. I've started this beginner course just for people who can't afford to pay. Do I schedule one-on-one classes for free? No, I will not do a one-on-one class for free, but you do have me here on live. So whatever question you have, just ask it here while we're here. Okay, so we started the Candlestick Bible. If you don't know, it's the anatomy of a candlestick, because with price action, each candle tells a story. So just a recap, we went over the engulfing candlestick. We went over the doji candlestick, the dragonfly doji, the gravestone doji, the morning star, the evening star, the hammer, shooting star, the harami, and the tweezer tops and bottoms. So if you don't know what those candlesticks are, you can go over to my YouTube page and watch those videos. And then they talked about market structure, how to trade trending markets, support and resistance levels, how to draw trending lines in the ranging markets. We've been over all of that. We are on the last two chapters, which is the engulfing bar candlestick pattern. And this is what we'll go over today: how to trade the engulfing bar, price action signal, trading the engulfing bar with moving averages, how to trade the engulfing bar with Fibonacci retracements, trading the engulfing bar with trend lines, trading the engulfing bar in sideways markets, the engulfing pattern with supply and demand zones, and money management trading rules. Okay. So we're going to go down to page 109 and pick up where we left off. We have one more chapter left in this book, and then we will start on the candlestick chart patterns. Oh, why is it going so slow? There we go. All right. The Candlestick Trading Bible, the engulfing bar candlestick pattern. The engulfing bar pattern is one of the most powerful and profitable price action patterns. Knowing how to use it properly as an entry signal will tremendously improve your trading profitability. In this section, you will learn how to use the engulfing bar pattern profitably. It doesn't matter if you're a beginner or advanced trader. If you're looking for seriously a better trading strategy more than what you have been using, you have come to the right place. What is an engulfing bar pattern? The reversal candlestick pattern consists of two opposite colored bodies in which the second body engulfs or covers entirely the first one. Okay, so this is a bullish engulfing. In this book, the bearish candles are black and the bullish candles are white. So as you can see, there was this little baby candle, and price came and ran the low and the high. It has to cover the low and the high for it to be considered an engulfing candle, okay? And then this is a bearish one. All right. It says a bullish engulfing pattern forms at the end of a downtrend. It provides a clear signal that the buying pressure has overwhelmed the selling pressure. In other words, the buyers are now involved. A bearish engulfing pattern occurs at the end of an uptrend. It is a top trend reversal indicator. It shows that the bulls are no more in control of the market and the price trend is likely to reverse. All right. So bullish happens at the bottom of a bearish trend because price is reversing. And then bearish happens at the top of an uptrend because price is reversing. And I can show you on the chart. We can go to GU. All right, and so I caught this sell yesterday. I'm going to delete my whole chart. I caught this sell yesterday because we had a bearish engulfing right here at this fair value gap. All right. So I use my rectangle line to mark up my 50% of my fair value gaps. And I only check the middle line, and then sometimes I extend it, sometimes I don't. I only use the background when I'm doing zones, okay? So for my fair value gaps, all I want is that middle line. And price came back to the fair value gap, and it gave me an engulfing candle right here. This red pink candle right here completely engulfed this black candle. This candle right here completely engulfed this candle, okay? And with engulfing candles, if you are here, then you know that we want to see price come back to 50%. All right, and this purple line was 50%. Price came back to 50%, and I entered a sell limit, and price continued to go a little higher, but my stop loss was here above the wick of the candle that created the fair value gap. All right, so engulfing candles, I use those a lot. So they have to run the high and the low, okay? It can't be like this one's. I used to think that this was an engulfing candle. So you see how this candle is smaller and this candle is bigger than that one, but it does not run the high of that candle. It just runs the low. It has to run the high and the low. It has to completely swallow that candle up, okay? Yeah, it was a nice setup. All right. You want to learn? We're here to learn. Tap in. All right, so it says, according to Steve Nyson, the father, this candle must meet three important criteria to be considered as a reversal pattern. The market is in a uptrend or downtrend. Let me do this real quick. Okay. Can y'all see the chart? Because I know sometimes on TikTok it kind of cuts off half of my screen. Okay. So it says the market is in a clearly definable uptrend or downtrend. And here the market was in a clear, definable uptrend, right? Price just pushed all the way up. We didn't even get any type of pullbacks like I wanted. I thought we were going to get the pullback last. And by that, they mean, so this one is showing the engulfing. The second body is opposite of the first body. So the first body is buying, the second body would be selling, okay? Or the first body selling and the second body is buying. All right, how to trade the engulfing bar price action signals. To trade profitably, to trade profitably, this chart candlestick pattern, you need to respect three important elements. One, the trend. If you look at any chart, you will notice that there are times where the market is moving clearly in one direction and times where it is moving sideways. And if you don't know, sideways is consolidation. To be honest, trading the engulfing bar pattern with the trend is the easiest way to make money in the market. You don't need to be highly knowledgeable about technical analysis to determine whether the market is trending or not. Make it stupid simple. If the market is making a series of higher highs and higher lows, it is about an uptrend market. And if it is making a series of lower highs and lower lows, it is simply about a downtrend market. And let's find a trending market. All right. So if we come over here on GU, we can see that price is making, well, price has to break this structure for it to be a higher high, right? And so this right here is our higher high. This is a higher low, higher high, higher low, higher high, higher low, higher high, okay? Uptrend. Downtrend. All right, and we're doing downtrend here. Price broke this low right here with this one. Okay, so this is our lower low, lower high, lower low, lower high, and then price just completely falls, lower low. Okay, so that's our trending market. And again, you can see it here in the illustration. Okay, so this is a higher low because price does not go lower than our last low. If price goes lower than our last low, then that is considered a break of structure. Okay. The illustration above shows a clear uptrend. You don't need to use an indicator to determine whether the market is trending or not. Just look at your chart and try to apply the concept of higher highs and higher lows and lower lows and lower highs. When you are analyzing your charts, bear in mind that the markets move in trends, and trading with the trend is the most important element in your technical analysis. There's no more important than the trend. Don't never try to fight it. I think they meant there's nothing more important than the trend. Don't try to fight it or control it. Otherwise, you will pay expensively for trying. And yes, you will. You can't make money under any market conditions. No matter how powerful your trading system is, you have to be patient enough and let the market tell you which direction it's going to take. Successful traders say the trend is your friend. And if you want to master trading the engulfing bar pattern, you must, your first rule is to follow the market direction. In other words, the trend should be your best friend. What time frame do you consider as a real break of structure? You really can't say what time frame, right? It just depends on what frame you're trading, because you can get a break of structure on the 1 minute, just know that it's going to be a scalp, right? The hour would be more intraday, and then 4 hour and higher would be more long term. Okay. All right. And so, number two, the level. When you find a clearly definable uptrend or downtrend, the next step is to identify the most important levels in the market. I mean, the most powerful support and resistance. If prices test a support level and stop, this is an indication that buyers are there. This area is watched by all participants in the market because it represents a great buying opportunity. Conversely, if price tests a resistance level and stop in an uptrend, this is a clear signal that selling strength is in the market. The example below shows how market participants interact with support and resistance levels. Okay, so resistance is at the top, support is at the bottom. They're saying, watch how the candlesticks react at these zones. Okay, you never want to enter in the middle of a zone. You always want to wait for price to come to the zone and then give you your candlestick patterns and your confluences. Okay, these levels take different forms, such as trend lines, channels, flags, triangles, and your ability to identify them in your chart will help you find better price levels in the market. This is the Candlestick Trading Bible. I have it downloaded, uploaded into the free Discord. The link is in my bio. In trending markets, when prices pass through resistance level, that resistance level becomes support. See the illustration below. Okay, so that's when, so this is resistance. Price rejected this area, it traded down, it passed through it, retested it, gave you an engulfing candle. Okay, this is why I love a good break and retest, which is what I was looking for. Well, which is actually what we got now on GU2, right? So if I come here on the daily, you can see this area right here. Price rejected this area a couple of times. I'm just going to put a random line at the moment, but I had a fair value gap somewhere up in here. Okay. But as you can see, price rejected, 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 and then we come over here to current time. And again, we got rejection. Price broke through it, came back and retested it. And I think I had this fair value gap actually. Let's see. Okay. All right. So even back, way back here, price was hesitant in this area, right? So now we haven't been up here since 2022. GU hasn't been this high since 2022. Okay. So this was a strong area of resistance. And then price finally impulsively broke through it and then came back and retested it. All right, and we don't have any engulfing candlesticks. This one right here is engulfing. You see how it ran the high and the low? This one right here was engulfing. All right, and then number 3, the signal. The signal here is an engulfing bar pattern. You can apply the same rules when trading the inside bar candlestick pattern. Your ability to identify an engulfing candlestick at a key level in a clear uptrend or downtrend will greatly enhance the probabilities of making a winning trade. Okay, so they're saying that this was resistance, price traded through it, it now became support, it came back and retested, it gave an engulfing candle, and then price went higher. All right. On this one, we we had our resistance, price traded through it. We did not get an engulfing candle, but we did get a morning star. Okay. So we did talk about morning stars. If you missed that, the link is in the bio. But these three candlestick patterns right here is a morning star. You have a bearish candle, a bullish doji, and then a bullish candle following. And that was the signal at the zone. Okay. So I am currently in this buy on GU. Where'd it go? All right. Trading the engulfing bar with moving averages. I don't use moving averages. I do use RSI and MACD indicator for overbought, oversold, but I don't use moving averages, but we'll go over it. Trading the engulfing bar pattern with moving averages provides a very profitable strategy. However, the lack of knowledge about using the moving average can damage dramatically your trading account. Traders use moving averages in different ways as a trend following tool to identify the direction of the trend. So they buy the market when prices are above 200 simple moving average, and they sell the market when it's below the 200 simple moving average. So we can, this one right here. This is SMA, which is simple moving average. We can go to settings, and then we can do length and change it to 200. All right. So they're saying buy when price is above and sell when price is below the 200 moving average. I don't see any engulfing candles. Okay, I do right here. Okay. So price moving averages also can be used like support and resistance, like moving support and resistance, right? So price came up to the zone, came down, touched the moving average, and kind of kept touching it, rejecting it, rejecting it, rejecting it. We have an engulfing candle right here. So you see this big candle completely swallows that candle. My only thing is with engulfing candles, I don't like to get in at the top because then you'd have to set your stop loss at the bottom, and that's a 31 pip stop loss. So if price doesn't come back to 50%, I'm not going to take it. So price somewhat came back to 50%. This probably could have been caught on a lower time frame, right? But when I see these engulfings, I just like to set a limit, set a buy limit or set a sell limit. And when you set a limit, you're just waiting for price to come back to your area, okay? And it automatically enter you in the trade. All right, traders use moving averages in different ways as a trend following tool to identify the direction of the trend. So they buy the market when prices are above the 200 simple moving average, and they sell the market when it's below the 200 simple moving average. To determine whether the market is overbought or oversold, we just watch how price interact with the moving averages. For example, in an uptrend, if prices move far from the moving average, this is an indication that the market is overbought. So let's see. Well, right now, I definitely knew that the market was overbought. So you see how far price moved from this moving average. And this was just one big impulsive move. It's rare that the market, this moved up 412 pips in 8 days. Didn't really give us any type of pullback until today. All right. And then another way that they use it is to predict the trend change by using the crossover strategy. If the moving average crosses over another, it is a signal of a trend reversal. As any trading system, the moving averages have disadvantages. This is why you have to know how to use it successfully under the right market conditions. This trading technical tool doesn't apply to all markets. Don't try to use it in a range bound or untradable markets. And by range, consolidation. So let me show you consolidation. Some consolidation ranges, you can trade, and then some of them you can't, right? So this area right here. You see how price is just bouncing up and down in this area. This is a consolidation range. And it's 85 pips. So if you're able to trade on the 1 minute, of course, you can get down there and trade that up and down, right? And then some consolidation ranges, it's just like leave it be, wait for price to break out. And as you can see, price broke out, right? Let me put that back up here. Wait for price to break out and show you where it wants to go. And as you see, price broke out, right? This trading technical tool doesn't apply to all markets. Don't try to use it in a range bound or untradable markets because you will get a lot of false signals and you will definitely blow up your trading account. To the best of my knowledge, using the moving average as a dynamic support and resistance in trending markets in combination with an engulfing bar pattern signal is the perfect way to make money in the market. The strategy is very simple. We will use the 21 and the 8 simple moving averages in the daily and 4-hour time frames. So let's put the 21, they said the 21 and the 8. Okay. That's ugly. Okay, so it said we use the 21 and the 8 simple moving averages in the daily and 4-hour time frames. We will define a clear bullish or bearish market, and we simply buy when price pulls back to the moving average and an engulfing bar pattern forms. So it said the daily or the 4-hour, they're using these moving averages. And they're saying when price cross, and you see we got a lot of crisscross going on. This is why I don't use the moving average. It's a lot. It's a lot. Because what is this right here? We got a lot of consolidation on the zone. I don't even really think I see any engulfing. Not on the daily. Let's see what's going on the 4-hour. See here on the 4-hour, we got a nice bullish. This isn't an engulfing though. This candle right here is very bullish, has all the bullish momentum, but it's not engulfing because it did not run that low. But it did get on top of the moving average. So I guess that would have been a signal. This one right here is an engulfing. Zoom in. This one runs the low and the high of this candle. So this is an engulfing. And then it came right back around and gave you a pin bar. So that was 2 signals off of the moving average to let you know that price was moving higher. Okay. And then they're showing you here the moving average crossing, and then you get your bullish engulfing. I'm definitely not going to be implementing the moving average, but I do use engulfing candlesticks, okay? All right, so how to trade the engulfing bar with Fibonacci retracement. Traders use Fibonacci retracement in different ways. However, the most important Fibonacci retracement levels are the 50% and the 61% Fibonacci retracements. Knowing how to use this tool in conjunction with Japanese candlesticks will definitely maximize your profit potential. According to chart technicians, the most major moves retrace around 50 or 61%. This knowledge will provide you with the ability to predict with high accuracy the next major move in a trending market. The strategy is very simple. You define a clear uptrend or downtrend, and then you define major corrective levels by using Fibonacci retracement tool. If you see an engulfing bar pattern matches up with 50 or 61% levels, it is a powerful price action trading signal like we see on the chart below. Okay, so the Fibonacci, they drew this bullish trend. You have this nice impulsive movement with no pullbacks. There was just like this one candle, and then they finally got a pullback. Price pulled back to the 61, and then price continued. So with GU, I can show y'all a fib because I currently just got into this GU trade off of the fib. So with the fib, it's impulse, correction, continuation. And so last week, we knew we had this big impulsive move, which didn't stop until here. So this was one full move. This was our correction, and now I'm waiting on the continuation. Okay, so you use your Fibonacci retracement, and you come down here to the low that started the impulse. Okay, and then you put the 0 at the high that started the retracement. Price pulled back to the 50%. So I'm looking for price to come to the negative 27 for my TP. Okay. So price coming back to the 50%. Hey, Jacoya. Price coming back to the 50%. And then price also coming into this fair value gap here. Plus a break and retest of this zone. That was 3 confluences for me to enter this trade. Okay. All right. So again, Fibonacci is point A, the start of the impulse, point B, okay, the start of the correction, and then point C would be your entry for continuation. Okay. Hey, Shane. All right. So point A, point B, and then we got 50% for point C, and then continuation. Okay. All right, so it says in the example above, the engulfing bar pattern, the engulfing bar price action signal matches up with 50%. So here we don't have an engulfing pattern, but we do have, again, a morning star, right? So remember, we have the morning star, the evening star, the bullish, bearish engulfing, the hammer top and bottom, hammer top and bottom. Okay, sorry about that, guys. The internet won't let me be great. It literally just dropped and completely disconnected. Okay, so what were we saying? In the example above, the engulfing bar price action signal matches up with 50% and 61% Fibonacci retracement level. The resistance level that becomes support is another confirmation to take this high probability setup. And we have the same thing here on GU. That's crazy. Whenever it decides it wants to load. Okay. All right. So remember this zone right here, price broke it. This was the resistance level. It became support. I'm sorry about the lagging, guys. My internet literally just decided it wanted to give up. And it's still doing it. But bear with me. This is why I moved over to YouTube. Because TikTok Live does not like me. But it's okay, we'll press through. Okay, so they're saying the exact same thing. The resistance level that became support, and this was resistance. Price broke through it. It is now support. We're getting the exact same setup, except for it's not an engulfing candle on the zone. It's a morning star. Okay. This trading strategy is very powerful. Here's another example below. Okay. So this was uh, support right here. Price rejected it. It traded up and then it broke through, came back and retest. This is why I love a good break and retest. Came back and retested it, and now it becomes resistance. We got an engulfing bar, 61.8 on the Fibonacci retracement tool, and then price traded lower. All right, trading the market from 50 to 61% Fibonacci levels means you are trading from better price levels. ICT calls it, don't give me the line. I know it's discount premium entry, something like that. You'll put as many probabilities in your favor as possible, and that will allow you to become one of the most successful traders. Trading the engulfing bar with trend lines. Trend lines give traders an idea about the psychology of the market, especially the psychology between buyers and sellers. Moreover, it allows professional traders to determine whether the market is pessimistic or optimistic. This technical trading tool is used in different ways, either as support and resistance by drawing them horizontally, or to identify price and time by drawing trend lines vertically. Okay. There is no wrong way in using trend lines. In trending markets, we use simply trend lines to highlight a trend by connecting swing highs and swing lows in price. This way helps us find high probability entry setups in line with general trend of the market. Hey, Joshua. Okay, so let's look at trend lines, right? And there's a trend line right here again on GU, right? So these are swing points, a rejection. So price rejected this area, it bought up, it came back, rejected it again. You need 2 points to draw a trend line, okay? I like to use my trend line tool and my magnet tool. And I'm going to start at the first rejection point and just move it over to the second, okay? Or you could draw it from this point, the first point to the second, okay? So with this trend line, we got a break and then a retest, which is what told me that price was selling, okay? So again, trend line, you got your first and your second point. Price is rejecting every time it touches the trend line. Now, don't just assume that every time it touches the trend line that it's going to reject, okay? And let's see if we can find an engulfing candle off of a trend line. All right, so this is a downtrend. And we can do here to here. And I don't really see any engulfing candles off of the trend line. Okay, here's one. Here's one. Okay, so we got our trend line. Price somewhat came outside of the trend line, but it closed underneath it and it completely engulfed that candle. Let's see. Not quite 50%, but it did trade. It pulled back far enough to where, let's say you got in here, your stop loss would have been 200 pips, but this is on the daily. This is on the daily. So even if you did here, right, to here, and I don't know, I'm sure there's a zone somewhere over there. The whole thing would have been a 4-to-1. Okay. So I definitely do love engulfing candlestick patterns. All right, so it's just Telling you again about the trend lines. By connecting the extreme highs, we had a trend line that acted as a resistance level, and the formation of the engulfing pattern shows a good selling opportunity. If you use just horizontal support and resistance level, you will miss this profitable trade. Learning about how to draw trend lines is never a bad idea because it is the simplest analytic tool that you can use to analyze financial markets. It works in all markets, whether it's Forex, commodities, futures, or options, and that is true. The chart above shows a bullish trend, right? Because what do we have? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So that is a bullish trend. All right, and we're not going to go over how to trade an engulfing bar in the sideways markets because if you are new to trading, you should not be trading consolidation at all. Choppy markets are a no-no. All right. Trading the engulfing bar with supply and demand zones. Supply and demand zones is another support and resistance, but you find them differently than you do support and resistance. Supply and demand areas are more powerful than support and resistance. It is the place where banks and institutions are buying and selling in the markets. If you can identify these turning points, you will make a difference in your trading account. To trade the engulfing bar pattern successfully with supply and demand areas, you have to be able to identify quality supply and demand levels on a chart. According to my experience, there are three factors that define quality supply and demand areas. One, the strength of the move. Pay more attention to the way the price leaves the zone. If the market leaves the area quickly, this is an indication that banks and institutions are there. Two, good profit zone. You have to make sure that the level provides a good risk to reward. Three, bigger time frames. The daily and 4-hour supply and demand areas are the most powerful zones in the market. The chart below shows a quality supply area. As you can see, the move was very strong and it indicates that the banks and institutions were there. Okay, so they're saying that this is a supply area. Supply and demand to me is the same as an order block. Hey, Robin, it's the same as an order block. Let's go back to the 4-hour. Okay, so this right here is an order block, right? It's this last down candle. I know although this candle is still pushing up, the candle is still pink. So that is still a bearish candle. So it's the last down candle before an up move. And you just mark the high and the low of this candle for your zone, okay? And when it's at the bottom, it's a demand, and when it's at the top, it's a supply area, okay? And then here, right, the last up move before this down move, this is the zone, okay? So demand and supply. All right. So if we're putting it all together, they're just saying that the engulfing bar is more powerful on the supply and demand zones than they are on support resistance zones. If you're drawing your zones accurately, I don't think either is more powerful. It's just waiting on the candlestick patterns to form and waiting on price action to show you what it's going to do, okay? So here is showing you a supply zone. Again, we have an up candle before the down move, and then price came back into the zone and it gave us an engulfing bearish candle, and then price continued to trade lower. Okay. Same thing here, but you can't really see the candlestick pattern. It says, I think it's not complicated to identify these zones because they are characterized by strong moves. So this is a strong move. This is a strong move, right? Although it didn't fall completely, but it definitely fell 180 pips from that zone, right? This right here, right? This is also a zone. This up move before this down move. We can mark this up, and as you can see, price hit this zone several times. It hit this zone, it rejected, it rejected, it rejected, it rejected. We finally traded through it, it retested, it continued higher. Now it retested it again. Okay. So it says, I think it's not complicated to identify these zones because they are characterized by strong moves. The secret behind supply and demand areas is that big players put their pending orders there when the market approaches these zones. We see a crazy move from these levels. If you can combine trading supply and demand areas with the engulfing bar price action signal, you will increase your chances to make money as a trader. All right, money management trading rules. So far, you have learned how to identify high probability setups in the market. This doesn't mean that all engulfing bar patterns are worth trading. Remember, wait for price to get to your zone and then let price show you what it's going to do. Price action signals with low risk to reward ratios. All right. It should always be a 2-to-1 risk to reward ratio or higher. And a 2-to-1 means if I'm risking $50, I'm gaining $100. Okay. Or higher. Okay. A 3-to-1. If I'm risking $50, I'm gaining 150. We never want to do a 1-to-1 because if I'm risking $50 and I gain $50, then with my next two trades, I'm losing all of my profits versus with a 2-to-1, right? You gain $50, you gain $100, and then you have your next trade and you lose $50, you still have some profits. Okay. So you always want it to be a 2-to-1 or higher. On GU today, we call it 10-to-1. All right. Once the criteria for a high probability setup are in place, there is no more analysis to be made. Just make sure your trade has a potential of a 2-to-1 risk to reward ratio. I mean, that amount of money you will win has to be twice the amount of money you risk or more. Okay. So they're showing you what your risk is, and then they're showing you what the reward and your TP should be, which was the next zone. Right. So here, I'm going to delete my chart again. I'm going to go back to the 1 hour. And I use fair value gap, supply, demand, support, and resistance. I use all zones, okay? I just recently started back adding support and resistance. But this was my fair value gap right here. This area right here. Okay. And I waited because I saw this engulfing pattern here. Sorry. I saw this engulfing pattern here from the zone. Right. And remember, I like to wait for price to come back and fill in 50%. I use my same rectangle tool. All right. See that purple line there? Let's take all that background. All right. You see that purple line there? I have my sell limit here directly on the purple line. Then my stop loss was above the wick that created the fair value gap. And then my TP was in this daily fair value gap here. All right. And I caught 150 pips. I didn't catch the full 180. So about here. All right. So it was a 9 to 5. Okay. I risked 15 pips. And depending on your lot size, 0.01 is 10 cents. So what's that? $1.50. 1.0 is $1. That's $15. And then a standard lot, which is $10, that would have been $150 risk to gain 150 pips. So on a standard what is that? That $1,500 gain on a dollar. That would have been $150 gain on 10 cents. That would have been $15 gain. Okay. So you always want your risk to be less than what your reward is. Did I really take and hold this trade? Yep. It's posted on my story. My signals group caught it too. It's not posted on my story, it's posted on my page. You can go back and see it on my page. Sure did. Because I was waiting for the sale last week. I posted it last week and we never got the entry signal. And so I was like, okay, this week I'm going to be looking for it. And not only that, I did also I combine a lot of stuff when I'm trading. So I also saw that price ran last month's high. And I was like, okay, let's possibly get a weekly CRT move. So I marked up 50% and price came back to 50% of the monthly. So I had a lot of confluences for this trade. All right. Price came back to it 280. And then again, we got this morning star. So I'm currently in the buy because, again, this was our impulse phase here. This was our impulse. This is our correction. And now price is currently going into our continuation on our 5th. Okay. So I can put my... Sorry, y'all. My internet is janky or TikTok is janky, one or the other. All right, so that is currently what I'm looking for on GU. All right, so it says, as you can see, all the conditions were in place to take a buying order. The market was ranging, as we discussed before. Major demand and supply zones are the best price levels in sideways market. Remember, we're not going to trade in sideways market, especially as a beginner. Wait for the market to trend or wait for the market to break out of the consolidation. The formation of an engulfing bar in the demand area is a good trading opportunity, but you have to look at the risk to reward to make sure that the trade respects your money management rules. Okay, and they're just saying demand area, but remember, it's the same as support and resistance, the same at supply and demand, the same at a trend line, the same in a fair value gap. Okay, all of these are zones, and you want to use these candlestick patterns to let you know what price is doing. Okay. This trade has a 3-to-1 risk to reward, which increases your chances to be winner in the long term. Because if you risk $200 in this trade, you are likely to win $600. It is very important to calculate your risk to reward ratio before taking any single trade. And it really is, because a lot of the number one thing that new traders do is calculate what they're going to make, and they ignore what they're going to lose. You always want to calculate what you're going to lose. Winning is a plus, okay? Winning is a plus. You need to know how much you are putting your account at risk. That's how a lot of people blow their accounts, because they over leverage and didn't even realize that they only have $100 in their account, and they didn't put the whole account up for sale. Like, just telling the market, just take my money. Okay? So it says case study. Imagine you take 10 trades with a 3-to-1 risk to reward on each single trade. I mean, when you win, you get $600, and when the market goes against you, you lose $200. Let's suppose you lost 7 trades and you won just 3. Let's do the math to know if you are a winner or a loser. 7 losing trades will cost you $1,400. 3 winning trades will make you $1,800. As you see, you lost 7 trades, but you are still making money. This is why risk to reward on your trades and risk management using the proper lot size for your account matters. And a lot of people ask people about their win rate, But there are people out here with a 30% win rate. This is a 30% win rate, right? He said you lost 7 trades and you won 3. Yeah, that's a 30% win rate. And even with a 30% win rate, you're still profitable if you are if you have the right risk to reward and the right risk management, okay? All right, the entry and exit strategy. Don't try to be smarter than the rest of traders. Keep it simple. You know what you're looking for when you identify an engulfing bar pattern, and you think all conditions are in place to execute your trade. Take an order immediately after the price action signal forms. Put your stop loss below the candlestick pattern and look at simply the chart to find the next support or resistance area. And this is going to be your take profit area. Yes, because we trade from zone to zone, okay? So this is saying that this was a supply area. Price came in. It gave us the engulfing candle. Put your stop loss above the engulfing candle or above the zone, or you can put it above the last structure point. So in this case, this was a low. This was a lower high, right? So you could have put it above that lower high. And then they found the next support level, and that was profit, okay? That was TP. All right. When you set your protective stop and your target, don't look back. Let the market tell you if you are wrong or right. Okay. They're going to tell you if you're wrong if it hits your stop loss. They'll tell you if you're right if it hits your take profit. If it hits your stop loss, don't be upset. Go back and look at what you missed, right? Because there was something that you missed. The market is black and white. You're either right or you're either wrong. Okay. So if you got it wrong, go back and figure out what you missed and then apply it next time. If the market goes against you, you will not feel good. It's normal. Losing money can be emotionally painful. Yes, it can. There's another reason why everybody says start in demo. I was one of those hard-headed people. I was in demo and in a live account doing both. And I had a lot of losses and I had a lot of wins, but they weren't consistent. All right. It's normal losing money. It's normal. Losing money can be emotionally painful. It is our human nature. Nobody wants to lose, especially when it is about money. Hey, if you don't like it, quit looking. In the trading environment, you have to think differently and accept the fact that losing is a part of the game. It is. In the trading environment, you definitely have to become detached to the money. Okay. We know we love to make the money, but we hate to lose the money. And when you lose the money, don't go on a revenge streak. If you've been trading for a while, we've all been there, right? So as a new trader, definitely learn from um, someone else's mistakes, okay? Studies have shown that successful traders don't risk more than 2% of their equity on each single trade. How much you risk, it depends on you, your risk tolerance, you know? If you're a beginner, don't risk more than 1%. Don't risk money you can't afford on a single trade, even if the engulfing pattern you identify indicates a high probability signal. No matter how smart you are, you have to think always in terms of probabilities. Yes, because trading is a probability game. Bear in mind that you can experience a series of losing trades, and if you risk too much money, you will not survive longer, right? All right, so that's it on that chapter. We have one last chapter, the inside bar candlestick pattern. If you missed the other candlestick patterns, I did post the lives to my YouTube, so go back and watch those, okay? I am going to remark up GJ and GU real quick. If y'all have a pair that you want me to mark up, we can do that before we get off of the live, okay? All right, so I'm going to start back with GJ one more time. I just need to make sure I'm seeing what I'm seeing because right now I am in drawdown on GJ, but it's cool if it hits stop loss, it hits stop loss, right? Okay, so I'm currently trading my structure points, right? So on this monthly, right, this was one full move here, really to here, because this really wasn't a pullback, okay? So this was one full move, and then price went into a buy. And now we have a lower high because price did not create a lower low, right? And then price is moving up and it did break this last structure area here, okay? So now I do see a fair value gap here, right on this structure area. I don't want it to be drawn like that. This candle to here, okay? And as you can see, that is a zone where price straight up rejected. And even over here, it kind of hesitated a little bit before it traded away. It was in this area for freaking months because this is a monthly, 640 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 months. It traded away and then came back and touched it again. Traded away, came back and touched it again. Finally broke it, came back and touched it again. And now we are here again, and we've been here for the past year. Okay? We've been in this area because this is the monthly chart. Okay? These candles have touched this zone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months, and now we're finally getting on top of the zone. Okay, so last month right here, as you can see, these candles tried to get on top and they wicked and they all closed underneath, and then this candle came and it opened bullishly. I'm new here. Are you intraday? All right, so it closed bullishly on top of this zone. Okay, so now I see that I have another fair value gap here, so I am going to mark that up. Okay. And then I want to measure in between these two just to see how far, like if I want to keep it. And it's 112 pips, so I am going to keep both of these zones. I'm going to go ahead and lock these so they don't move on me. Okay. And then I drew this trend line. I have a rejection point here and a rejection point here. Remember, you only need 2 rejection points for your trend line to be valid, okay? And then I have a rejection point here and here. So price is somewhat in a wedge right now, okay? Now I'm going to come down to the weekly. And I am going to mark this fair value gap here. And then I'm going to zoom over just a little bit more because I see rejection here and rejection here. And I want to find that area over there. Uh-oh, I thought I locked that. I want to find this area that price is rejecting, because it was rejecting here, is rejecting here, and it just rejected again right here. So I'm going to just zoom over to see if I can find that zone. Okay. And as you can see, price, when it gets to this area, is consolidating in between these two. And I think we're going to go with this fair value gap right here and see what happens. Where is that candle? Now I'm going to go back to current price, and that, see, it touched it here, but it didn't touch it here or here. So I don't really want that. And now that I'm back at current price, I do see that there's a fair value gap here. Okay, and that's the one that I want. Can I explain what I'm specifically doing? I thought I was doing that. So we're doing our top-down analysis. We started on our monthly. We marked up fair value gaps, and these are areas that price reject from, okay? So we're looking for our zones to look, that we look for our entries on, okay? So I had a fair value gap right here. I was looking to see why price was rejecting, right? It rejected once, twice, and now again the third time. So I was looking for this zone right here. Okay, so now I have this zone, and then I also have my trend line. I'm going to tighten my trend line up some. Here to here. Okay. All right, so now I'm going to come down to my daily time frame. All right. And then here on my daily, as we can see, we got rejection, 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 rejection. So where is this zone? I see a price balance range right here, right here. So a price balance range is when you have an inversion fair value gap and a regular fair value gap. Okay. All right. And 2AT, right? I marked up that inversion and that gave me my zone. Rejection, rejection, rejection. This is where in the book where Price was saying that price goes from resistance, right? And then it breaks through and then it becomes support again. Okay. So now I have another fair value gap right here. I'm going to delete this one. Okay. And I'm going to mark this one because this one is more relevant. All right. And price just hit this area. And even as you can see over here to the right, to the left, I'm sorry, price is kind of stuck in this area for a couple of days. 1, 2, 3, 4. It finally traded down and then came all the way back up and touched it again. So we know that this is another significant area, okay? So now I'm going to come down to my 4-hour. All right. And just looking at this chart, is this in an uptrend or a downtrend? Is price making higher highs and higher lows or lower highs and lower lows? Uptrend, yes. Okay. So this is an uptrend. All right. Price is making higher highs, higher lows, higher highs, higher lows. This right here did not break this high. Okay. So all of this is one move until we get to here. Okay. This was our next higher high. This was our next higher low and our last higher high that price just made. And now we're looking to see if price is going to make a higher low and then give us another higher high. Okay. All right. So remember, we got this zone right here from our daily. And I'm looking here on my 4-hour. And this was one of our candlestick patterns, a pin bar. Okay. Although we didn't talk about it today, we just talked about the engulfing, but you can go back and find the video with pin bar. Okay. So a pin bar happens when price trades down, right? Which is why we have all of this wick. Price traded down and then price pushed all the way back up. So sellers was in the market and then we got to our zone and then the buyers came into the market, okay? So this is what made me get into this buy. I got into a buy at the zone and then we also have our impulse, our correction, and then I'm looking for continuation. Okay, so I put my fib on here. So this was my low. Okay. All right, so this was my low that started the impulse move, and this is my high that started the correction. Price came back to our zone, okay, and the 618. So price come back to the 618. TP1 is the 27, and TP2 is negative 61.8. Okay. I'm just going to take it to the 27, but I see I have a fair value gap here. So I want to see, maybe I'm going to take it to that fair value gap. I just want to see where the fair value gap came from real quick. Okay. It's a weekly. Yeah. I'm going to take it into this weekly fair value gap, which is in between. This was the 27 and the 68. Okay. So this weekly fair value gap right here. But let's see what happens because we definitely need a break of this trend line and then a retest to go higher. So for now, I may just take it back up to the zone and then wait to see if price is going to break this, because I don't know if price is going to break it. It could come back to the zone, and then there's another fair value gap right here. It could come back to the zone and then drop again and just play around in this area, right, until it finally breaks out. So I think I'm just going to take it back to the zone. So I am in this trade. Can't find my position. Yeah, here. And I see a fair value gap here. Right here on the 1 hour. And I'll take it there. I'm gonna update the TP in the, oh yeah, this is plenty of pips. This is a 3-to-1, okay? Not a 3-to-1. Let me update my stop loss. Stop loss is gonna be below this wick. So it's a 9-to-1, okay? 26 pip stop loss, 260 pip take profit area. You want to wait for price to get to the support area. This is what we're talking about with price action signals in the candlesticks, okay? You want to wait for price to get to your support resistance, your supply demand, your fair value gap, whatever you're using for your zone. And then when price gets to your zone, then you want to wait on your candlestick patterns. So like you see here, right? This was our zone. And if you would have just sold here when price got near it, you would have been in 60 pips worth of drawdown. Wait for price to get to your zone and then wait for price to show you that it's going to sell. Okay. So this was my first price action signal right here. Price came to my zone and I got an evening star. This was my first price action signal. Okay. This bullish candle, this doji, this bearish candle. Majority of these price action candlestick patterns, I'm looking for price to come back to 50%. Okay. I did not catch this sell at all because I wasn't looking at GJ, but 50%, you'd have been in a little bit of drawdown, stop loss above the high of the price action signal, and then TP back down here to your zone. Okay. So don't just buy when it gets near, because, and then that's another thing, or don't just sell when it gets near, because that's another thing. You don't know if it's going to reject, right? Why did I lock that? Delete. Okay. I don't know why that was so difficult. Okay, so you don't know. I'm sorry, I'm missing a zone. Let's go back. Give me my line back. Okay. All right. So you don't know if price is going to reject the zone. So as you can see, price bought up to the zone, right? And then it played around on the zone, and somebody was like, okay, it got on top of the zone, so now I'm gonna buy. And then what happened? It decided to sell, right? So you want to wait for your confirmations. Okay. So the first confluence was price came to the zone. The second confluence was price gave me an evening star candle off of the trend line and closed underneath the zone. It bounced off the trend line and gave a completely bearish candle. Like there's no wicks under here. And then the third confluence, price came back to 50%. Okay. So don't just buy or sell at an area. Let's see. Look. So let's see here, like for example, this area right here, right? So it first came to the zone, it rejected and it sold. It came to the zone again. Although it did come a little bit higher, it still rejected and sold. So now here's the third time, and price gave you this nice bullish candle here, but that's not an engulfing. That's not an engulfing bearish candle. It's not a evening star or any of that, right? So technically that was not a signal, okay? And then it traded through. You'd have got clapped. It traded through, it retested, and then it went higher, okay? So it's all about waiting for price to get to your, they call it POI, point of interest. I just say wait for price to get to your zone and then let the zone show you what it wants to do. A lot of the times you're going to get consolidations on these zones, right? You're going to have to wait a little while. If we come back over here to where price hit it a couple of times, we didn't get any consolidation, but we did get, you know, a nice little sell and then a lower high and then price drop. But then over here we got some kind of consolidation. We got a little more consolidation. We got a little more consolidation. Okay. So wait. I trade SMC. I didn't mix some of everything together, child. Some of everything. So this is what I'm waiting on GJ, y'all. Okay. So GJ, and then I'll show y'all GU. Let's go back to the monthly. Okay. And I'm identifying my structure points again on the monthly. So I'd like to take my pattern tool, right? And this is my high, my low, okay? My pullback was here. Now it's a lower low, okay? And then this is the pullback, all right? All right? And then price broke that area, and then here, and then here, okay? So my last two structure points is this area and this area, okay? Where my last structure points was, I see that I have a fair value gap here. So I want to mark this fair value gap up. All right. And as you can see, price came up, it filled in the fair value gap, and then it rejected and closed underneath 50%. Did the same thing over here, came back and kind of retested this same area, and then closed underneath the 50%. All right, price came underneath this area, retested, dropped a little lower, retested again, dropped a little lower. Now I'm like, it's doing like a little uptrend back up to this area, okay? Because that's a strong area. So of course, price is pushing up on the higher time frame. We look at last week's candle, we have an engulfing candle, okay? So we have this. Okay, I'm sorry about that. So we have an engulfing candle. Remember, it has to run the low and the high in order for it to be an engulfing. Can you cut the air back down? I kind of cut it up and then I put this robe on and now I'm hot. I know, right? It was freezing in here, y'all. It was on 69. Okay. Last week we had an engulfing candle. Price ran the high and the low, right? Which is another confluence as to how I caught this sell. I knew price had to come back into it 50%. Okay, and it did hit right on the nail. Also, it did the CRT move right on the head. Okay. What did I just delete? No, I want that back. Okay, and then what else do we have here? All right, so I also see a fair value gap over here. So I'm going to mark this fair value gap up. Here on today, price came into this fair value gap here. I'm going to extend that to the left, which was also resistance, right? Because price tried to get on top of it, but it didn't. until we got this nice bullish move, right? And this bullish move is just that weekly engulfing. And now we got a break and we got a retest. All right. And then if I come back over here to the left, you can see that this area was also respected. You see how it rejected, kind of consolidated a little bit, but both of these areas are important. So although they look like they're pretty close together, let's measure it. It's about 77 pips. So a 77 pip zone is nice, right? So now I have to find my zone in between this, because this right here is a lot, 286 pips. Although last week GU did move like 400 and something pips in a week, that's rare that price does that, right? So in between here and here, I want to find another fair value gap. And I see one right here, and I'm looking at this one because I see all these rejection points right here. Okay. So I see this fair value gap, and I want to mark it up. And to AT, you see how price just, it's rejecting these areas. It's showing me that this is a significant price level in the market. Okay. So now it's 139 pips versus 200 and something. And 139 pips is reasonable on GU as far as the zone, okay? So now I want to come down to my 4 hour, and I saw a trend line on my daily. So let's go back and mark up this trend line. And again, a trend line shows you your trend, okay? Yeah, and higher highs, higher lows, higher highs, higher lows. All right. So I'm going to start here from the bottom, and I like to use my magnet tool just to get to my first 2 points. So this is my first point, this is my second point, and it just automatically draws it into the future. And I also have a trend line here, okay? Because price still hasn't quite pulled all the way back here. It seems like it just decided to make its own trend line here. So I do want to mark this one up also, okay? And when price comes up in here, it becomes a channel. And I do have Nas right now kind of in this little channel here, right? So you can have two trend lines and you see if price will respect it. You can have two trend lines next to each other, okay? All right, so go back to GU on the daily. All right, so we had all kinds of confirmations for this buy, right? We got a break, we got a retest. Price came back to the fair value gap here on the daily. Also gave us 50% of our monthly CRT and also 50% of our weekly engulfing candle. Remember, I told y'all when we trade engulfing candles, I like for price to come back to 50% of the engulfing candle, and then I'll enter, okay? And then from the zone, although it didn't hit this one, it came inside of this fair value gap here. And it gave us a pin bar. Pin bar again, price sold, and then the buyers came in, letting us know that it is trying to trade higher, okay? All right, so I entered this one kind of late, and I sat there and watched it too, and I knew better. I sat there and watched it, but it's cool, it's cool. I got in here. My stop loss is here, okay? And then I'm using my fib tool to find my TP, okay? So impulse, correction, continuation. So point A to point B is what I do, use my fib. Okay, I start here, point A, and then point B is where 0 goes. C should have been the entry, which was 50%. And when price comes back to the 50%, what I was taught is TP is the negative 27, okay, which is right here. And we can see that we have a zone right here. So since price is so close to this zone, it's 17 pips away, I'm going to extend mine to the zone, okay? And this is a 4 to 1. Okay, it's kind of a wide stop loss, 66 pips. All right, so that's what I'm on GU and GJ. All right, and it's 8:19. Y'all let me know if y'all have another chart that you want me to go over real quick. Otherwise, we will go ahead and log off for the evening. And then I'll be back tomorrow. Go ahead and click my name and turn the notification bell on because I am not sure what time I'll be back. Today I was supposed to go live at 8 and that didn't happen because I'm feeling sleepy. So I went live a little bit earlier. So turn on the notification bell so that you can know what time it will be here. And tomorrow will be the last day for the Candlestick Trading Bible. And then tomorrow's Thursday. We'll wait till next week, Monday, and we'll start the Candlestick chart book, okay? The Candlestick pattern, book, okay? And it's basically going over like flags and wedges and all types of stuff like that, right? So I was trying to see if I could find a pattern. I think Nas had a pattern. SPX. All right. Let's delete SPX. So if you don't know, Nas, SPX, they're mainly bullish pairs, right? So as you can see here, price is just going straight up, right? So SPX and Nas moves in a cycle. And you can ask ChatGPT, and ChatGPT can tell you what happens within the first quarter, second quarter, third quarter, fourth quarter, right? So we're going into the summer, and if you ever pay attention to gas prices and stuff like that, when the summer comes around, prices go back up. Christmas time, prices go back up. Beginning of the year, we get a little bit of pullback, a little bit more of a pullback, and then summertime prices go back up. So that's what happened. What's happening here on the chart, right? So here, this is November, right? And then price just pushes up. Let's see, November. This is November 2023. Price just pushes up. And then March, we get a little pullback. And then May, price is pushing up. Then August, we get a little pullback. And then price continues to push up, okay? So we know that price is heading for all-time highs because that's just what it does. And it's not far from it. So current price is right here at this red line. The last high is the peak of this wick right here. It's only 53 points away from all-time highs. So it's definitely going to make its way up there. It's just knowing when, right? And when to get in. So I'm marking this last high, okay? That's because that's an important area. I would mark this last low, but price isn't coming back down here. It's not coming back down here, okay? So now I'm going to come to my weekly. All right. And I'm going to zoom out and I want to show y'all the weekly structure. Okay. All right. So we got one bullish move up. Then we got a higher low. This is not a higher high because it's not higher than this. Okay. So now it's here and then here. And now we're looking for our new high. So the only thing that I would mark up here on the weekly is this area here because I see this fair value gap, okay? All right, and as you can see, price just rejected it once. It came near it, but didn't quite touch it. It came underneath, kind of gives a pullback, but didn't quite touch it. And then it traded along this area for 3 weeks, and then we got our bullish push, okay? So then now we can come down to the daily, okay? And as we can see, ever since June, or really ever since all the way down here, right? April, price has just been pushing up. But the past couple of days, we haven't gotten any kind of pullback because you don't see any pink candles. Everything is black. And I would say wait for a pullback, but with indices, you really don't know. You have to see a pullback on a smaller time frame, okay? So I don't see anything else here that I would really want to mark. I can mark up this fair value gap here, right? Because price broke that. And eventually we will like to see a retest back to here. But now let's go down to the 4-hour. Okay. Okay, so I want to zoom back out and I want to see what else is going on. What happened in this area the last time price was here? Price was recently here just earlier this year, February 2025. Price has broken above these highs because current price right here is this dotted line. Okay, so what is going on over here? All right, so I have a fair value gap here that I can mark up. That price has already gotten on top of, but as you can see, price respected this area several times. So let's go back to current price and let's see. All right. So this was our hold up here. Price was moving sideways for the past 2 days, right? It was a hold up here. So I love this now, right? So now price gave us a bullish move, right? We have resistance. Price broke through it. And now this is where we want to see price come back to continue higher, okay? So, and you can see that there's a fair value gap here. So now I'm going to come down to the hourly and I'm going to look at these candlesticks. And if we look at these candlesticks, this is what you call exhaustion, okay? When you get these big full body, you see how there's a lot of volume, a lot of momentum in these candles. Even the ones with the wicks, right? Price tried to go higher and then it went lower. That was a lot of movement. The past couple of hours we're getting kind of wick exhaustion, but it is Asia session also. But it's definitely, price is definitely moving towards the high, okay? Now it's only 39 pips. It could hit the high tonight and not even give you a reversal. So my thing is when price is pushing up, right? You never want to get in at the high because then price could pull back. I always wait for a pullback and then enter for the continuation. So price could just run off and leave you on this point if you're not already in this. So I'm zooming back over here to the left, back when price was here again on the 1 hour. And I just want to see if there's anything important over here on the 1 hour. Okay. All right. And here on the 1 hour, we have another fair value gap, which is actually a price balance range. Okay. Remember when you have an inversion and a fair value gap together, that's a price balance range. So I am going to mark this area also. And as you can see, price respects this area. All right. So I can see that price is somewhat struggling trying to get on top of this area because if you look closely, these two dotted lines, this is where price currently is. So let's go back over. All right. So this is why we have this wick exhaustion because price is on this zone. Okay. So now this is where I won't mark up any more zones, but I will come down to my 15-minute, my 1 minute, or my 5 minute. Okay. And now I'm just going to pay attention to the candles here. This is where I want to see my candlestick patterns, okay? I want to see a morning star for a buy. I want to see evening star for a sell. I want to see a bullish engulfing for a buy, a bearish engulfing for a sell, okay? So price is on this zone. Just wait for a break and retest to go higher, all right? If it doesn't go higher and it comes underneath and retest, then we know it's going lower to fill in this gap here on the 4 hour, this gap right here, because we've already got a break and we eventually need a retest of this resistance area. Okay, so you have two zones that you can look for. You can look for a buy, right? Or if price comes underneath, then you can sell it down to here, and then when price gets to this area, hold it back to the high. Shoot, and when price gets to all-time highs, it sometimes go crazy. So shoot, I'd hold it. I'd hold it until you start to see wick exhaustion, okay, or candlestick exhaustion, and that's when the candlesticks start to look like this, right? Indecision. Okay. These candlesticks right here is telling you that buyers are in the market. Okay. These candlesticks right here is like, I don't know what's going on. You can pull the trade because you see price just dropped for a few more pips. Like, don't be greedy. You can pull the trade when you start to see that. And then price reversed on you. So you don't want it to come back and then you lose all of your pips. The points, pips, whatever. All right. And I am going to mark this zone here because I see it. All right. So that's SPX. So let me know if that helped. And then also, I do use the RSI and the MACD. So let's come down. I trade Nas and SPX on 1 minute. Not on this one though. That looks ugly. Let's go to the 5 minute. Okay. And now on I use this RSI MACD divergence by Indian. Okay. I didn't change any of the settings. It was beautifully made. All right. And the only time where I say trade double bottoms and double tops, and double bottoms is a W and a double top is an M. So a W, double bottom, and then double top is an M, right? And a lot of people look at the chart and they're like, oh, I see a double bottom, a double top on the chart with the candlestick patterns, but it doesn't play out. But down here on divergence, if you look right here in this area, you see this little W right here, that second point, and then don't let it say hidden bull. That's another confluence. Okay, that was this candlestick right here. You get at the top of it and you take it up to the zone. That second, but it has to be the second peak. Don't do the first one. Okay. And then this one right here was a double top, but this is during Asia session and it's consolidating. So just leave that be. Okay. Nas is a New York session, sometimes London, and sometimes it works during Asia. But if you really just want to stick to it and be more precise and accurate, stick to New York session. Okay. All right, so again, here, right at a zone, this was a double bottom. Like, just look for like a funky W. I think this one is called a Quasimodo. It's kind of a funky W, right? Let me draw it out for you so you can see it. Where'd it go? Here, here. That's too thick. I think it's too close together for me to draw it out. Okay, back to the zone. This bearish candle right here, and then if you line it up, you got one double, the bottom of that one, and then here, that was a W. Can't really see it, but that second point was here. Get in at the top of that one and take it up to the zone. This indicator right here has become an extra confluence and has been everything. The name of the indicator is RSI plus MACD by Indian, IDYAN. Okay. And I used that also when I caught GU. Okay. So this was my zone here, my fair value gap, right? And if you look right here at the bottom, you got a little M. And this was my second point, was that black one. And then I got that engulfing candle and I was like, heck yeah, let's do it. Okay. So M's and W's on this indicator, especially on a zone. Remember, wait for it to get to your zone, okay? Yeah, this is Forex, but you can use this with any chart. You can use this with futures, um, stock options, stocks. You know, a chart is a chart. They're all on TradingView. As long as they don't have a whole lot of gaps, I can't trade. I don't like trading a chart with a whole lot of gaps because I trade fair value gaps. Oh, and let's mark up gold because I think gold is about to buy and I didn't really have it marked up. So let's mark up gold. Okay. So gold is another one of those they call it a safe haven, right? When stuff is going on in the economy, people just buy gold. Gold is one of those things to where if you don't have any cash anywhere in the world, but you have a real gold chain or a real gold bracelet, you can sell it, right? And use it for cash. It's a commodity. Okay. So price is just going straight up. I don't have any structure on my monthly. I mean, I do, but I don't, right? Like, it's just bullish. It's just bullish, right? So I don't really have anything on my monthly to mark up. I can't mark up a CRT because price has not ran last month's high or low. Okay. One thing that I can see on the monthly is that price did an all-time high and then now it's kind of giving us indecision, right? On the week before last, price closed like directly in the middle, and then last week price went bullish and then the bears came in because it closed pink. Okay, now it looks like price is opening up and trying to go higher. So now we can go down to the weekly and let's see. On our weekly, I am going to mark all-time highs. Okay, and then I'm just gonna mark this low area right here and just put price in this little box. Okay. Now I'm going to come over to the daily. Now remember, I'm not going to zoom over to the side like I did with the other ones because there's nothing over there. Nothing over there. Not, price hasn't been this high. It hasn't been this high at all. Let's go back to the monthly real quick. Price has never been this high on gold. Right? This is going all the way back to 1941 where gold was just sitting still for a minute and then they finally got their first spike in the 80s. Okay, so there's nothing over there for me to compare price to what's going on right now. All right, so I am going to just put it in this little box. So I mark that high and then I mark the low of that pullback. So now I'm going to come to this daily and let's see what's going on inside of this zone right here. I do see a fair value gap, right? Which is why price gave us this pin bar and then it continued to go higher. And then I also see a trend line. So I have a rejection point here and a rejection point here. So I'm going to mark this trend line. All right. So right now we got a break of the trend line, but we never really got a retest. Okay. And then if I look at the trend line, I see a fair value gap right here, right on the trend line. So I am going to mark that. All right. And that fair value gap, do I have a setup for the indicator? This is the only platform I take my trades on MetaTrader, but I mark up here on TradingView. We can go back over the indicator in a few. All right. So I marked up this fair value gap, and as you can see, price rejected it here, It traded above, but closed underneath here. So this is pretty valid, right? So this is where it looks like price is trying to make its way back to. Okay, so now I'm going to come down to the 4-hour and I'm just going to zoom back into my box here and I will see what's going on, what else is going on in my box. So I'm going to tighten up my trend line because I hate for like the wicks to be underneath if I can get it precise. Okay. All right. So again, this same zone right here looks like price is coming back to it. Price reacted. As you can see, it did sell off and it sold off because we had a gap here. This is a new week opening gap or a market open gap. So this was Monday, and this was Monday 1 o'clock candle, and then this was Monday 8 p.m. candle. So this wasn't a new week opening gap, but it was a new session gap, right? And price came to this gap to the T, 50%, and it rejected it. Now it looks like price is trying to push back up because our main area is this one. This is the area that it's more concerned about. All right. So then I also see a trend line here because we got rejection and rejection. So I am going to mark this trend line also because price is closer to this trend line than it is to this one, right? And so now we can see that we just broke on top of it and then came back and retest and came back into this fair value gap here. And bam, look at how beautifully price respected this area. Okay. So now we got even more precise, okay, on our zones. Now I want to mark something in between this area and this area. Remember, this is our all-time highs. I do see a fair value gap here, and I see one here. I'm going to go with the bigger fair value gap, the inversion, okay? And we got price respected it. There's nothing else over there. All right. All right, so these are my current zones that I'm looking to trade to, okay, on gold. So price just broke our trend line. It retested and touched our fair value gap. Okay, so now I want to come down to the hourly time frame, and I think I'm definitely about to buy, okay, because price is back inside of another fair value gap. We have 18 minutes left on this candle, and if price closes on top, then I'm going to buy it from wherever price closes, and then my stop loss will be here at the low of this candle that created the gap. Why is my line crooked? There we go. All right. All right, so I am going to buy gold, and then remember, I'm taking profit at the next zone, which is, I thought it was a 4-hour fair value gap. Yes, which is this 4-hour inversion gap right here. As you can see, price kind of respected, not kind of, but price did respect this area, okay? You got it on the buy to retest, nice. Yep, it's beautiful. It really is. So we got 17 minutes left on this candle. Let's go down to the 30-minute. All right, so remember, this isn't an engulfing candle because price did not run the low, but let's see if we got an engulfing anywhere. The 15, the 5, the 1 off of the zone. Uh-oh. Okay. No engulfing candle, but very much so a lot of bullish movement. I'm going to turn my indicator on now, and let's see what the indicator is saying. Okay, so the indicator gave us divergence, and divergence is when you see down here on the indicator prices making higher highs, higher lows, higher highs, higher lows, right? And if you follow this dotted line up here, this is the area that it's talking about. And price is not making higher highs and higher lows right here. It's doing complete opposite. So that is called divergence, okay? So price is selling here, but down here it's buying. So that's letting me know that price is getting ready to reverse, okay? You're selling from 65. I mean, I don't know. We take it one step at a time, right? So I'm buying now, and This is pulling back, giving us a little retest of this. I'm finna get in now. I surely am. All right. I love it when you get a pullback to be able to get in. And we still got 16 more minutes of that hourly candle, okay? So again, this is divergence. As you can see, price was going lower and lower and lower. It finally came into this fair value gap here. It came to 50% to the T, and then it started to push up bullish, okay? Now, my only concern about this is on the indicator, it's still overbought, especially on the 4-hour. So we'll see what happens. But I'm not going to overextend TP. Again, TP is at that 4-hour inversion. Or was it a daily? Daily inversion. Fair value gap right here. Okay. Especially since we got a break and retest of the trend line. All right. So that's what I'm looking at for gold. Let's see. Stop loss. I just got it in here. Stop loss. That's the wrong way. Stop loss here. Below the candle that created that fair value gap is 45 pips. And TP. Gold gives out a lot. 246 pips. Okay. So we'll see. We still got 13 minutes left in this candle, and price is still kind of moving sideways, but we did get on top. Okay, and I'm looking here on the 15-minute. We got a pin bar candle here. We got a pin bar candle here, so it's just waiting on price to break out of this area. It could consolidate here all night, and it could do one of these numbers and run those lows right there, and then continue higher. Okay, so mark your zone. This was I'm trying to remember where we got this zone from. This was a daily fair value gap right here. Mark your zone. Okay, if price does decide that it wants to run this liquidity right here before going higher, just wait, let it run the liquidity, and then see if price is going to close back above this gap and then get back in. Okay, but hopefully it doesn't. We're back in profit, and hopefully we can get some bulls in the market and this closes back at the top and not in the middle as a doji. Hey, it has been a long time. I missed you guys too. Y'all, I've been on vacation. Been on vacation, okay? All right, so we got gold. We did SPX. Is there another one that anyone wants? It's 8:48. I think we got a few more minutes. I'm back though. At the beginning of the call, we did our Candlestick Bible. So when this finishes, I'm going to download it and then I'll upload it to YouTube. Y'all, I'm really trying to get back on Streamlabs because I don't like the way it looks when I download it from TikTok to YouTube. It's only like phone view. So I've emailed TikTok several times. I don't know what else to do. I don't know what else to do to get my permission back. I don't even know why it was revoked. And if you can't find that daily fair value gap, there's one right here on the hourly, and you can wait for price to get on top of that if it does decide to run any lows. Okay. Alrighty. Buy. Yep, we bought. We bought low below this area. Remember, just be cautious because it's Asia session. Okay. And I do see a little bit of liquidity right here. So again, if price comes down and runs this liquidity and it comes back and closes back above 50% of this hourly fair value gap here, right? If it comes back low and then comes back above it, then you can get back in. But I'd rather get in and then get stopped out and then re-enter than get in and not get stopped out and miss the move, right? And it's only 45 pips. Do not over leverage. We just talked about that at the beginning. You can be a profitable trader with a 30% win rate as long as your risk to reward and risk management is right. You know, a lot of people, they're not profitable because of their risk management. Risk management is the strategy for real. Reading the charts is a strategy, but risk management is the strategy. Okay. All right, guys. My watch is telling me it's time to stand up. It took you a long time to get that. It took me a while to get that too. I'm not gonna lie. Because a lot of people they really don't preach that, right? They don't preach it at all. All you hear people talk about is support and resistance and fair value gaps and all the technical part. A lot of people don't teach fundamentals either, you know. I had to learn fundamentals because I like to trade news. I like to get those big moves. So one day we will go over fundamentals. Yep. All right, guys. It's almost 9 o'clock. Is there anything else? If you're interested, all right. We'll turn the notifications on and hop on the lives when I'm here. Don't let anybody tell you can't get anything for free. Let me tell you something. I do this for free because nobody was doing it for free when I started. Okay. And everybody wants to break the cycle of these 9 to 5s, you know? Everybody, we all tired of it, you know? I don't care how much you like your job. We tired of them. Do I do signals? Yeah, link is in the bio. I do signals. There's an ebook that you can buy, also one-on-one. Where am I from? I currently live in Texas, but I've lived all over. Not a military baby. I'm just a wanderlust. It's 10 where you are. I'm on Central Standard Time. And I'm hungry, and it's probably really too late for me to be eating, but I'm about to go eat something. What? I don't know, because I don't feel like cooking. What do you need to use? So if you want signals, the link is in the bio, and then when you get into the group, I have everything that you need to download and the links and all that stuff and how to take the signals. There's videos in the group. How much you need to get started? You can get started with $100. If you get started with $100, every trade that you take, please make sure it is 0.01. It is 10 cents, okay? 10 cents per trade, but you can get started with $100. And then when you get to 200, you do 0.02. And I also have a lot size chart in there also, as far as what lot size you use per how much money you have in your account. Okay. Start tomorrow. The first 30 days are free, so just go and sign up. First 30 days free. You don't like my signals and all that stuff afterwards, cancel it. Do I trade futures or forex? I trade both. I trade both. On the future side, just indices, but on the forex side, all of the currency pairs and indices. Future side indices and gold, indices and gold. No options, not yet. Um, I haven't figured out the language on options, and when I did try to figure it out, it was kind of confusing. And um, what was it, Robinhood and all those platforms? It was kind of confusing. So I was just like, maybe I'll come back to it another day because it's just another stream of income. But I have to take the time to sit down. Yeah, Weeble, all of those. I was like, just looking at it was a little, I don't know, it was confusing. See, futures and forex is literally like the same thing as buy and sell. You using trading view, use the same charts. Only difference is pips versus contracts. That's it. It was easy to figure out. Options, I was like, what is going on? Do I do prop firms? I like to trade live accounts because with a lot of these prop firms, they start doing this trail and drawdown thing. When I first started, that wasn't a thing when I first started. But now they're doing this trail and drawdown thing, and I think it's unfair to do trail and drawdown on unrealized gains. So, like on a move like this, if you're trying to catch the whole move, right, and then price comes up here and then it pulls back, you get penalized for the pullback, right? You have to take it at the high, or you have to take it like if you're up $500, but you move your stop loss into profit and you close out at 250, they're still counting the negative, the other 250 that you didn't get. I think it's stupid. Is a 3K buffer for Top Step account good? I guess it's good depending on how you trade. And then another thing with the prop firms, you have to remember that although it says it's a 100K account, it's your account is technically only as big as your trailing drawdown. So you have a 100K account and the trailing drawdown is $3,000, then you trade it like you're trading a $3,000 account. Okay? But I did find this prop firm called Atlas Funding, and they give you one like free try. It's like $10 to activate it, but they give you one free try basically. So if you pass the challenge, then you pay for it after you pass. But to activate it is $5 and it's on Trade Locker. So I was gonna try that one because I saw that they didn't have all that trail and drawdown rules and all of that stuff. So I am gonna try them out. What time is gold news tomorrow? What I think about NFP today, buy or sell. NFP is Friday, and this is gonna be my first time seeing how NFP reacts on a holiday because Friday is the 4th of July also. So I'm not sure what's really gonna happen. All right, so news tomorrow. Tomorrow's July the 3rd. Okay. And we have average early earnings. We have non-farm employment change, unemployment rate at 7:30. This is Central Standard Time. So it's 8:30 Eastern Standard Time. So right before market open. And then we have PMI at 9 Central Standard Time, 10 Eastern Standard Time. When you sign up tomorrow, are we doing a trade? Probably not because I've already called my signals for tonight. So probably not. We're currently in GU buy and GJ buy and gold buy. Lifestyle gyms, you said what is it again? What is what again? Hi, what do I think about? What time is gold? Anybody know? Okay, I was making sure. Okay, yeah, DM me. Wait till next week for a new trade, yeah, because we're already in two. I'm not even gonna call the gold one for them. They're in two trades. I don't want to overpower you guys' accounts, right? And then they've already won the GU sell. So we're already up 150 pips. Why is this locked? We're already up 150 pips on this GU sell. So it'll be a little extra if we get this GU buy and GJ buy. Okay. I appreciate y'all tapping the screen and getting some likes. If you don't already follow me, go ahead and follow me. My link is in the bio for my YouTube. Also, I do trade live on YouTube as well. And click the notification button on here and YouTube. GC, are you talking about GBP CAD? Which GC? Which platform you need to set up to start? As soon as you get in the Discord, all of the videos are in there. It's under the beginner section. Gold. Yeah, I bought. We're buying to this inversion fair value gap here on the daily. This one right here. Right here. We're buying back to that area. And our candle has closed. And we got somewhat of a doji, but price closed on top right here. It closed on top of our hourly fair value gap, so that's a good sign. Looks good. All right. Any more questions? It's 9 p.m. Any more charts you want to mark up? You on the same setup? Nice. I love that. You entered at the order block right here. That was a good entry. Your target's at the daily liquidity. Let's see. I don't see any liquidity here on the daily. So when I see liquidity, it has to be like equal wicks or equal bodies. Why not target 3393? Where you at? 3393. Here. Because I have this zone here before I get to that area there. Okay. I'm taking it zone to zone, right? This is my purple line right here. So if I delete everything, that in price, and it was back here in this fair value gap. So if I mark that back up right here, okay, and you see how price respected it. So this is where I'm taking my trade to. I don't want to overextend it because price could trade through it, right? Or it could get to it and reject. I don't know what's going to happen there. It's looking like a swing trade. I don't swing trade. I trade from zone to zone. So I'm going to let the market take me out, and I want my take profit to be hit, right? Now, I mean, you could swing trade it because price is eventually going to come back up here to these highs, right? eventually it's gold. Like it's gonna buy, but I'm not gonna hold it that long. Right? And then this is looking like here. This was my impulse move here. And this was my continuation. I'm sorry, my correction. And now we're going into continuation mode. But I don't swing trade. I don't want to hold it. Gold. You already placed the buy on gold. Nice. We all in a buy. Where's the TP on gold? This daily fair value gap here. This fair value gap right here at 50%. You expect a retracement one more time? Yeah. See that, and I don't want to get caught up in retracements holding a swing trade, right? I hate that. I absolutely hate that. We're on gold, Curtis. So this is my zone here, and price already reacted from this market open gap right here, right? Price already reacted and rejected from there. Uh-oh. Right? So now I want to see it come and touch this area. Today better be bullish. That's what I'm looking for. That's what I'm looking for. All right. TP back right here is 243 pips. Like, no need to be greedy. Even if you just take it inside of the fair value gap, right? Because we did have some rejection over here. Even if we just took it to here, you'd have to tighten up stop loss, but it's still 87 pips, which is great, a great trade. So that's why I'm not going for anything higher, but I don't see any daily liquidity. For it to be liquidity, I have liquidity here on GJ. Hold on, let me show you. I can delete all of this. And right here, you see how equal these two are? That's liquidity. And I like to see if price ran it. The easiest way that I can see if price ran it, I use a horizontal line and my magnet tool, and I do the first one. And as you can see, if we zoom in, price came right to the same section. It did not run this area. So this is liquidity. So I don't see any liquidity on the daily on gold. All right. All right, guys, it's 9:08. I see more people joining. Thank y'all for joining. I am going to download this as soon as I don't use the line chart. I'm going to download this as soon as we get off and then upload it to YouTube. The link to my YouTube, the bio is, I don't even know if y'all can see me. I've been leaning on to the side. The link is in my bio, so you guys can go back and watch it. I will be back tomorrow sometime. If you click my name, the notification bell will come up. So just hit the notification bell and it'll notify you when I am live, okay? We're currently going over the Candlestick Bible. We are on the last day. Tomorrow will be the last day. And then on Monday, we will go into the Candlestick chart pattern book. I can't remember the author, but we'll go over it on Monday. So if you guys don't have any more questions or any more pairs for me to mark up, I am going to wrap it up. So I'll give you guys a few more minutes. Let me know. Thanks for the follow, guys. I appreciate it. And hopefully you guys can make some money off this GU. I understand everybody want to get in gold, but GU would be the better trade for me. And it looks like it's pulling back. There's a fair value gap right here. If price comes back to this fair value gap, this would be the better entry. If price does come back to this fair value gap, I'm going to get another entry and then stop loss below the wick, okay? ES, we marked up SPX already, and we marked up our zone. And as you can see, price is currently at a zone, and it looks like it's trying to trade away. And we do the same thing here as we do on the other one. So now we got our break. Want to see price come back. Looks like it's creating a fair value gap here, right? So let the why? So let this candle close, and then let the next candle happen to create that fair value gap, and then mark up 50% on your fair value gap and enter that fair value gap, and then take it back down to this zone right here. And you can easily find this zone if you just look on your 15-minute. You see you have a rejection point here, and then price broke and retested it, and then you got all these rejection points here. Okay, price is definitely trading away. What is a price value gap? So it's a fair value gap, and you see right here where there's like a hole in between those two wicks. So you have a wick here and a wick here, but the candle never came back into it. But if we look at all the other candlesticks, you see how price trades back into the other candles unless it leaves a gap. So when you have a fair value gap, that means that the market makers, the people that run the market, came into the trade and they put a lot of money in it, which pushed the price up so much that it left this big gap, right? And so they say that the market makers come back and they grab their money and then they continue. So this is why we look at fair value gaps for entries, right? So this right here is a fair value gap, right? The market makers came in, gave us all of this volume, then they came back, they grabbed whatever orders that they had here, and then they continued to push it higher. And then as you can see, they came back here again. Okay, I think it's better than support and resistance. Okay. Nas and Bitcoin. Nas would be the same as SPX. I do have to remark up Nas because I've had this on here for forever. So let's delete Nas. We'll come to the monthly. And as we know with indices, it's just pushing straight up. Oh, and Nas has already ran all-time highs. Okay. Nas has already ran all-time highs. Nice. So we know that SPX for sure is going to come up and run all-time highs. Okay. Can I show the fair value gap on gold? If I go back to gold, come back to the 1 hour, the most recent, are you talking about the TP fair value gap? So my entry fair value gap was this one right here. This one right here on the 1 hour. And then TP fair value gap is on the daily, and it's right here. You see that big hole in the market right there? Right here. Okay. And that's TP. Can you see it? Yes. Okay. All right. So I'm gonna go back to Nas. And what is this? Yeah, I don't really see anything on the weekly. I do see a fair value gap here, right? So I am gonna mark that, but I'm pretty sure price might not I'm pretty sure, but price may not come back here. But as you can see, how price just consolidated on this area. And then we did get a break. So price may come back here because we never got a retest. We got a pullback, but it never came back and touched this to retest it. Okay. So now I'm just going to come to my daily. And as we can see, price is bullish. But I do want to zoom over. All right. And I want to see what made this price sell off and reject here. And I see this fair value gap here and here. I'm going to take this one. Okay. And so now these are our zones, right? We got this nice impulsive move. So it's impulse, correction, continuation, right? So we got an impulse. Eventually, we're going to have to get a correction, especially with this big fair value gap here, right? And then price is going to have to come back and retest the highs also. So I am going to mark this daily fair value gap here, okay? And I just want to measure these two just to see how close price is. And that's 179 points. Zone to zone, that's super doable on Nas, right? 100 points is easy on Nas. So now I'm going to come to the 4 hour. And now I'm going to mark my most recent high, right? Because this will be the next zone that price is trying to break. Okay. And up in here where I have all of this rejection here, I have a fair value gap. All right. So these are all of my zones. And I don't think I want to add anything else because we got plenty. I do see a trend line. I got rejection, rejection, rejection. I do want to mark the trend line. All right. So we got a break on our trend line, and it looks like price is trying to come and give us a retest. All right. 100 points. What are you risking? 20 to 25 points. FBG ICT groupies. I am an ICT groupie. I love him. You don't have to, though. Your choice. All right. So I am going to mark another zone here because I see that we got some rejection here in this area. So I'm going to mark this fair value gap here. Okay. All right. So now we are closer. We're getting closer and closer to price. All right. 25 points, my lord. Somebody doesn't know risk management. Didn't we already talk about this? 25 points for a 100-point gain. That's a 3-to-1. Okay. Okay. Do you mark up charts on the 4 hour daily and enter on the 15? I start on my monthly and I enter on the 15, the 5, the 1, sometimes the 1 hour, right? The GU trade that I caught, I entered on the 1 hour because I was looking for 50% of my engulfing candle. Okay, so these are our zones. I don't see any more trend lines. So now I'm just going to come down here to the 15-minute and figure out what's going on. As we can see, we have consolidation in this area here, here, and now here. And again, we have another fair value gap, right? Whenever you see some type of rejection, you want to see why price is rejecting, right? And it is rejecting because of this gap right here, right? We had resistance, price traded through, came back, somewhat traded off of the resistance, but then it traded through, and we got a retest, right? I love a break and retest of these zones, okay? Then price sold off. Now we are back at the zone. Price is giving us all kinds of consolidation. It gave us a morning star right here. We got our bearish candle, our doji, our bullish candle. Looks like price is giving us 50% of that pattern right now. Okay. Price gets on top of 50%. Heck yeah. Take it back up to the high. Okay. 4-hour liquidity. I guess you're talking about this high here. I don't consider it liquidity unless it's equal. Okay. But heck yeah. We're right now at a zone on the 15-minute. We're expecting gold to buy. Please try GJ. We marked GJ up. It's in consolidation. I'm in a buy. Stop loss is below this wick here. You missed the buy? British, we can re-enter in the pullback. British what? Why not re-enter smaller size? I'm not sure what you mean. No, scalper though, you trade prop. Do I trade? I like live accounts. We already talked about prop firms and how they janky with this trailing drawdown rule. US GU. I'm gonna buy on GU. We are in buys on GU. Price came down into this daily fair value gap here. Right here. Price came down into this daily fair value gap. It broke above this resistance. I'm looking to take it higher. Looking to take GU higher. So again, there's a fair value gap right here on the hourly. When it made this morning star, look for price to come back here, and then you can enter here. Stop loss below that wick. It's 45 pips. TP. Trying to figure out which fair value gap TP is in. TP is in this fair value gap here on the weekly. And then it also aligned with our fib. Okay. Yeah, impulse and correction. Now we're looking to get the continuation on our fib. Price pull back to the 50%. We're taking it to the 27, but since this zone was so close, we're going to take it to that zone. That's GU. Do I scale into positions? Sometimes I just want to get in and then not watch it. Just found out you can't get started on 10 pound. No, I don't think so. I don't think 10 pound would be enough. You can always enter late. Just use a smaller size to balance out. I hate entering trades late. You need to stay on this side of TikTok. Come on. Go ahead and follow and hit the notification bell. I think I answered all the questions. Just started learning. Nice. That's what we're here for. These videos go to YouTube. So right now we're going over candlesticks and how to read these candlesticks. So those videos are on YouTube. And then a couple of live trades also. All right, so gold is doing well. I wouldn't get into Nas or SPX tonight though, guys. Wait for London session, not London, New York session. Wait for New York session. If it falls, right? If it falls, that is great. Let it come right here. I think it'll come to this gap right here. Let it come right here. Okay? And then take that bad boy up. And I'm going to be watching for it 2 in the morning. Like, let it give you a pullback because this was our impulse, right? Correction, continuation. Nas has already hit all-time highs. SPX normally follows Nas. Can I give a quick summary on how to do this? We've been on here for 2 hours and 41 minutes. If you click the link in my bio, there's plenty of videos on YouTube on how I do my top down analysis. And then when we get done um, with this video, it's gonna go on YouTube. But quick summary, Forex is buying the fluctuations in the market, right? I mainly trade GBP USD. Okay, the name is right here. The pound, which is the British pound versus the US dollar, and you're trading trying to see if the pound is going to go up or if the pound is going to go down. So since the pound is in front, if the pound goes up, that means mark up our charts. We are looking for zones that price have already reacted to. So as you can see, like right here, this was a rejection point, right? And we were looking for sales um, with our confluences, right? Over here, this purple line, this was a rejection price, rejected, it came back, rejected it again. So you want to wait for price to come to your zones and then look for confluences within your candlesticks. And these are called candlesticks to let you know what price is doing, okay? So that's a quick summary on what is going on. Okay. I almost want to just close my GU trade and then wait for price to come down here and re-enter. But I'm going to leave it. I'm going to leave it. All right, guys. Well, I hope y'all learned something today. I hope you learned something, and I hope you make some money with either this GU or gold trade. All right, and then GJ, there was a trend line here too that I don't have marked up. So this is a pattern here that we will learn when we start the pattern book. You see how prices just traded in here. We finally came out and retested, but it didn't go higher. It came right back in. This is a pattern right here. This is called a flag. You got your flag pole, and then price breaks out. So we'll learn about that next week, okay? What broker do I trade with? I use CoinX. The link is in the bio for my broker. I use CoinX because I still wanted to trade on MetaTrader 5. Being here in the US, everybody kind of took away MetaTrader. Well, not everybody. Something with Russia happened. I can't remember. And then they took MetaTrader away from us. And then everybody was making their own platforms and it was janky. And I was like, heck no, everybody platform. I don't know if y'all remember, but like Trade Locker, when they first came out, and then Sway Markets, everybody was making their own platform that kind of looks like it mimics TradingView. But baby, they had so many lags and skips. I was upset. I was like, oh my God, I have to get back on MetaTrader. So I am with CoinX. Yes, with CoinX. Yes, it is unregulated, but they've been around for a long time. They have great customer service. I mean, they have a Discord and they have their email and then a chat box on their website. And like whenever I have any issues, like normally I get my withdrawals within 30 minutes to an hour. One day it took like 4 hours to get my withdrawal. I was like, what is going on? Although it was on a Friday. And I messaged them and within 30 minutes I had my withdrawal. So I don't have any issues with them. Wait, is this just practice or is this real? This is real. When the next time I'm going live, I'll be back tomorrow. Click my name. Bell will the notification bell will pop up. I'm not sure what time. I like to enter my trades at night. Well, it's not that I'm not a morning person. I'd be up till like 3 o'clock in the morning. So if I see something in London, I'll enter in London. But when it comes to that New York session, it'd be a struggle. But if I'm up, we could possibly trade, especially since because looking at SPX, it's looking nice little pullback. It's giving us a nice little pullback. It's dropping too, but leave it be. Let it do what it's gonna do. So no promises, but and then a lot of times if I am trading New York session, I am in the bed trading New York session from my phone. This is why I sit at my computer and I do all my markups on TradingView, and then you have the TradingView app on your phone, and then I do my markups on MetaTrader too. So I don't even have to come to my computer. Uh, what do I think what NFP will do to gold? That is a good question. So earlier I was saying that Friday is the 4th of July. And this will be my first time experiencing a holiday with NFP. So I'm not sure. I have no clue. So we'll see. Like, will we get that NFP move because the banks aren't open? You know, will we get that move? I don't know. We'll see. You've never done this before, but you had like 40 training videos pop up on your feed. Yeah, once you get into into the trading world, it's a lot. It's going to take you over. Hi, Val. Good evening. All right, guys, my butt's getting sore, and I'm for real. It's 9:32. Turn that notification bell on. I'll be back tomorrow sometime, and TikTok will let you know. The link to my YouTube is in the bio. The link to Signals is in the bio. I also have a ebook, and if you want a one-on-one, that is in the bio also. All right, so I'll see y'all tomorrow. Y'all have a good night, and let me know if y'all make some money, okay? We're in gold and GU buys for sure. I'm not gonna advertise GJ. We'll see. GJ be janky sometimes, y'all. GJ like to play with my emotions, so we're not gonna advertise GJ. Sweet dreams. Later, guys. Oh Lord, I can't end it. Where's the end live button? Okay, here we go.